Good evening. I'm Epstein with your Metal Market Wrap-Up, and this wrap-up is for the evening of Thursday, the 25th of April, 2024. And time-wise, well, we're just after 6 p.m. Central Time. Wild day today because the GDP was such a mixed event. I discussed this in my morning video, but to make a long story very short for you, inflation is still prevalent. High interest rates are taking its toll on the economy as a whole, and GDP numbers are slipping to a degree. So this is the wobble in GDP. I'd like to call it that. But inflation is still proving to be very sticky, and we're seeing that in the prices. Now, tomorrow we get another part of this, and that'll answer some of the questions, because always you got to take into account how the math is done. Tomorrow morning, what you're going to get in the marketplace is we're going to get the monthly PCE income, spending, and price index data. And that comes out at 7:30. They're forecasting personal income up 0.5% on month-to-month terms, while spending is seen up 0.7. But of course, we'll want to see just how this all fits in with the inflation story. I expect it's going to come very similar to what we saw today. And what that does is I believe it'll keep the Fed on hold. Now, I know a lot of people are still saying, oh, September's still in play. Well, here's what they're not telling you. June and July are gone. So forget those. Now, if September's in play, it means you're going to get weak jobs data coming up a week from tomorrow. It would mean that CPI numbers got to start falling and that the wobble turns into a run, the beginning of a run to the downside, an embedded, a locked in. GDP is getting worse. I'm not convinced that you're there at this point in time, so I'll wait and see. I think still the most likelihood, if we even need an interest rate cut, and that's too soon to tell, I think it would be December at the earliest. I think that you'd need to get 3 in a row, in my opinion, of bad reports to get the Fed to get worried. They will try to get ahead of the curve, but they're caught in a funny spot. The only reason September could come earlier, in my opinion, and I'm not in that camp, would be these numbers that come up between now and before the September meeting are just so bad the Fed feels they got to get ahead of the curve. They can't do anything right in front of the election. That's the latest they can move. Afterwards, they can do whatever they want. That's my take on it. Okay, so we come back here and we can see that tonight you're up in everything. Why? Remember, this is the heart of earnings seasons. So you are getting Google, for example, exploded in value. Market's up rather dramatically. There's some dividends being declared for the first time. So you're getting certain markets that are now doing well. Snap was up 24%. So as you put these in and you look at the NASDAQ where they're at, that's kicking that sharply higher. Other markets joining the parade here is an overall part to it. Intel did not do well. They were down 5% in the aftermarket. Gold market is coming alive. It's starting to throw out minor buy signals again. Silver market came out of the downtrend today. Copper keeps moving. You know, you're going to look back and think $3.50, $4 copper, that was a gift. You're not going to be there for a long time eventually. You're getting a chase in copper now of the merger acquisition game. So BHP Hilton is going after Anglo American. We'll see if that works out. It's a $39 billion bid. That gives you an idea. That's a monster. And that's kicking up things all over the place. Platinum's looking maybe like it's seeing a low. We're going to cover these in a minute. And all the currencies are waiting on everything. Now, the Bank of Japan very shortly will give us an answer on what their monetary policy is, if they're going to surprise the market with anything, because their 2-day meeting ends on Friday, but think of the time differences, so you're coming up to that now. Bonds and notes, I'm still in the bear camp on. Okay, so in the gold market, we are down for the week 2.86%. Okay, not bad. It's not falling apart. When you look at the market, you've got the spike high. You made sort of a spike low here, and the market's trying to get its footing. Suddenly, with the outside day up today, you have a pattern of higher lows, higher highs. All right, that's the first part. Where's the 18-day average of closes? Because if you're Under it, the bias is down. If prices are over it, the bias is up. And you're right here. So while the swing line has turned up, the battleground is very clear. It's at the 2360 level. For me to get friendly, you need to close over it. So far, it's a bear market rally because of the bias. I told you that I thought you were going to start yanking in yesterday the Bollinger Bands, and that's what's happening. See, the sideways action all of a sudden will narrow these bands in and bring the support resistance lines closer to each other. The markets only stay out of Bollinger Bands 5% of the time. You can and do get from time to time what we call these vertical price rises and what I call a gorilla glue trade. But when the market steps out of the gorilla glue trade, just think of it. It's been running there. Sometimes it yanks back and fights a battle at the 18-day average, and that's just what's currently going on in the market. But if inflation's proving sticky, I'm not in the bear camp in the gold market, nor am I yet in the bull camp. I'll wait for the technical indicators. Momentum's still coming down. Prices fighting at that number. They've got to prove what they could do. A bad sign in gold, because you always got to look both sides, would be getting under the lows of 2316.40, which are today's lows. That could open the door up to go back to the 2302 level. A bull sign closing over the 18-day average of closes. In the gold-silver ratio, as long as this number stays over the 18-day average, gold to me is stronger than the silver market. And when you look at silver, it's a similar pattern. First, you're bringing in the Bollinger Bands. They're narrowing in. Second, you've got the higher lows, higher highs. Third, you've got an oversold market. Fourth, you had an outside day to the upside. As long as you don't take out the lows of today, which could take you back to wherever they are, where it's 2704 now, the lower band, a close over 2815 starts activating bullish signals. So something I'm watching there. In the copper, now I wouldn't go chasing against the Bollinger Band. Markets, I believe that professional traders program into their trading that when you hit Bollinger Bands, you take money off the table. Now, there's ways to stay with parts of the trade, other parts. But when you hit the band, I believe the first time they hit it, they take something off the table. I've developed in my embedded course where I teach you, how do you take the whole position, parts of position? It's all answered there. You have an embedded slow stochastic reading. This is still a very bullish situation in the copper market. Not so in the platinum. It's the laggard of the metals. I've explained that. It's still in a downtrend. You've got to take out the lows of Wednesday, the highs of Wednesday in order to negate the downtrend. But you got down close enough, today. That was a pretty interesting number if you look at it. I'm going to take you back to today. The low is 95.05, all right? And the Bollinger Band, well, you're basically, you got down to it. And the market held it for a test, and you're getting a bounce away. That's the point that I'm making. In the dollar index, the bias is up. The market's in a corrective mode. I don't think it's going super far, but it's in a corrective mode, and it either re-embeds or these numbers have to get away from 70 to get me interested. In other words, under them. I don't see myself wanting to do anything right there, so you've got to be cautious. Now, this is a great time for a lot of you that are new to our station, and we're always picking up new people. We have a number of offers. These are some of them. There's more. They're on our website at iraepstein.com. Under free offers, which is the top left. And all you do is you click on the blue, you'll see that, and it goes into a shopping cart for you. You put in your name, your email address, we get everything out to you right away. You can get access to my research if you haven't tried it before, our mobile parts, price counts. Price counts are something I use all the time. You won't catch it at other firms. Think of it as a mixture of like a Fibonacci count, a swing line count, all put together, and where the market might go after. Now listen to what I'm saying. It's not a buy or a sell signal. It's a price determination signal with probabilities as to the first objective, the second, the third, and so on. And I use that because I often wonder, where might a market go? Well, I wasn't a fan of it when I first learned it. Now I find it indispensable. You might too. Give it a try if nothing else. I'm Ira Epstein. You have a good day. Remember, you can move your cursor, by the way, to the top here. You'll see an icon, and that'll take you to the website. Otherwise, iraepstein.com, free offers.